Motilal Oswal flexicap has underperformed sharply in the recent period, and the most people blame wrong thing. Today, I'll explain the real reason in simple language using a few key number and funds positioning. No drama, just facts. If you like simple data back investing breakdown, like the video and subscribe. It really supports the channel. First, the recent snapshot. In the last 3 months, the return is minus 9.48%. In the last 6 months, it is minus 7.68%. And in the last 1 year, it is positive 5.54. So, yes, the underperformance is mainly visible in the recent 3 to 12 months. Now, compare that with the peers. HDFC FlexiCap shows minus 1.5 for 3 months, plus 4.72 for 6 months, and plus 17.91% for 1 year. Parak FlexiCap shows minus 2.67 for 3 months, plus 0.79 for 6 months, and plus 9.28 for 1 year. So the gap is real. And the key question is, why Motilal Oswal getting hit more in this phase? Reason number one is beta. Beta simply makes means market sensitivity. In simple word, how strongly the fund moves when the market moves. Motilal Oswal has beta that is 1. The peer shows have 0.77 and 0.59. So in the weak or volatile market, this fund typically feels the full impact. Reason number 2 is volatility. It is shown as the standard deviation. Standard deviation means how much the fund returns swing up and swing down. Higher number means bigger swings. Motilal Oswal shows 15.8%. The peer shows 10.29 and 8.28 percentage. So this fund is clearly more swingy. And in unstable market, bigger swing often mean deeper short-term falls. Now the most important check: if a fund takes more risk, it should reward you more. That's where Sharp and Sortino comes in. Sharp means return earned for total risk. Sortino means return earned for downside risk, meaning bad falls. Higher is generally better. In the snapshot, Sharp is 0.95, the peers are 1.37 and 1.59. Sortino is 1.28, the peers HDFC and Parak is 2.3 and 2.46. So in the normal language, the fund took more volatility, but the reward did not come in the same proportion, and that's why the risk adjusted performance look weaker in this phase. Next is the portfolio structure, specifically concentration means how much the fund depends on a few large stock or large holding. Yes, the top holding are heavy. Coforge is 9.41 percentage, persistent system is 8.77%, and Nifty 50 is 8.76. Eternal Zomato is 6.75%, and Cholamandalam Investment and Finance is 6.63%. When a few holding have high weight, a weak patch in just one or two name can drag return down quickly, which makes short-term underperformance look sharp. Next is equity percentage. Equity percentage means how much of the fund is invested in the shares. Higher equity exposure means less cushion during correction. Motilal Oswal has 87.82 in equity, peers have 82.12 and 77.32. This is for Parak Parik. So this fund is more fully invested, and that can amplify drawdown when market corrects. One more point is cost, called expense ratio. Expense ratio means the yearly fee charged by the fund. Here it is 1.71%. The peer are 1.34 and 1.28. This is not the main reason for the sudden 3 month fall, but it is still an extra headwind versus this alternative. So, to summarize clearly, Motilal Oswal FlexiCap underperformed recently, mainly because it has position as the more aggressive fund. It has beta that is 1, so it reacts strongly when the market, and it has strong volatility at 15.8, so swings are larger. Its sharp is 0.95 and Sortino is 1.28, showing the extra risk wasn't rewarded in this phase. It has high concentration in top holdings like, as I said, Coforge, Persistent, It has higher equity exposure at 87.82%, meaning less cushion in the correction, and it has a higher expense ratio at 1.71. If this was useful, like the video and subscribe, and I'll keep these breakdown simple, factual, and practical. Thank you very much. See you in the next video. Thank you.